Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 10th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. We do have Fed Chair Powell speaking, testifying here today and tomorrow at 9 a.m. Central on both days. The market is going to be watching that very, very closely. Again, the market has compressed over the first 7 trading days of the month here, and you can see down here a nice narrow bar here. It is at 67% of normal, so we don't have the magenta color because it's not below 65% of average, but it is quite compressed compared to normal, as it is awaiting testimony from Fed Chair Jerome Powell. At some point here we will likely see expansion from this range, and if there's anything that causes a breakthrough, the 2960 level, that could open up quite a bit of selling pressure, perhaps back toward 2880, maybe even all the way back to 2800 or lower. So this could be rather significant here, depending on how the market receives that information from Fed Chair Powell over the next 2 sessions. One thing we did talk about yesterday was that price was inside the PIMA trigger zone, and that typically offers an opportunity for bulls to defend and buy. Yesterday turned out to be a modest trend day to the upside after the early rejection from lows, and you can even see right now price is testing the 8-period average from above and continues to be bid off that 8-period average. Bid below it over here was bid as it rallied. So bulls are still doing what's necessary here to make it appear bullish moving forward, but again, we are forming this range above recent highs here. These are all-time highs, and as we saw last September, it could sit up here above that high, but if it doesn't push the envelope to the upside, that opens the door to getting people long ahead of a sell-off. So again, that could be a bull trap in waiting there off the 2960 to 2950 zone. So this is going to be something to watch as we move forward. But again, a failure to hold 2960 could open up quite a bit of selling pressure on a near-term basis. Here's a look at the NQ. You'll notice the NQ looks very similar. Yesterday had quite a bullish day, a very strong finish to the day, a very steady trend day from the lows throughout the day, and then it finished very strong. Again, you can see right in here, that's the PIMA trigger zone. That's where you buy, typically speaking, in an uptrending market, as we discussed yesterday morning, and that was indeed the case here today. So far, price is holding above the midpoint of the previous session's range, and is currently holding within a narrow 7-day range as well. Again, we're at about 64% of ADR, and that is a compression signal there. And that could, again, this is early in the day, so we have quite a bit more day before that changes. But overall, this range right here is developing ahead of Fed Chair Powell's testimony, and that could impact which way we break from this range. We are developing this range at the recent highs, so if we do break down, say through 7740, 7750, that could open up a return back towards 7400. Maybe even all the way back across the range towards 7K. So this is going to be very important. Overall, bulls continue to defend the PIMA trigger zone for a shot higher, but again, we've got to see how this plays out heading into the testimony. Looking at crude oil got a breakout to the upside yesterday in after-hours trading, again on the API report. API weekly crude oil stock came in at a large draw of 8.1 million barrels. Again, that forecasts what could occur here today for crude oil inventories. Overall, we had a very narrow 4-day range yesterday. We had an inside day yesterday as well throughout the entire day until weekly crude oil stock came out for the API, and that large draw led to a rally. And so now we're starting to see this thing push higher. Again, we mentioned before that this steep pullback here, the fact that it landed above 55s could be an opportunity to push this thing back toward recent highs between 60 and 60 quarter, and it also provides an opportunity for this thing to continue higher towards 62.70 to 63, kind of retracing the initial sell-off here. So overall, this has more upside to come here. We do have crude oil inventories coming out later on at 9:30 a.m. Central, and that could impact directional conviction here for crude oil. But at the moment, everything continues to trend higher. I would say the fact that price broke through the 58.20 here, which is the previous month's close, makes 58.20 a very important retest zone. So if price were to come back to 58.20, could provide a buying opportunity for a continuation higher. Let's take a look at gold futures. You'll see right here with gold futures, price has continued to hold above the 1375 level. There's a 1380 LVN, a very clear D-shaped profile that has developed. Again, after a big high range June, you tend to see a trading range July, at least early on, and that's what we're seeing right now. I would say that any pullback as deep as 1375 could still be defended for a continuation toward 1440. At some point down the road, we may see that expansion where this thing explodes through 1440 and continues onward toward that 1525, which is the next key level above. So right now, still range bound. It would be a little better here if we were to take out the recent low here and then reject, as I mentioned yesterday in the pre-market report. But right now, bulls are still keeping this area bid. Keep an eye on 1400 above that zone. Opens up 1440. All right, keep in mind I will not be posting another pre-market report until next Wednesday. So enjoy the rest of your week. Good luck, trade well, and I'll see you soon. Take care.